The very prestigious Mansion House in the City of London played host to the IFN London Islamic Finance Week 2018. Participants from all over the globe descended on the venue to discuss the growing Islamic finance industry. Some of the key issues and themes influencing global Islamic finance investment were on the agenda for examination and discussion, including Brexit, the ascendancy of fintech, the 2030 vision of Saudi Arabia, climate change, and the potential of furthering green investments. The UK has, in recent years, demonstrated a commitment to growing Islamic finance locally, to become the leading hub for this sector outside of the Middle East and Asia. It hosts 5 fully Sharia-compliant banks and was the first non-Muslim majority country to issue a sovereign Islamic bond, known as a sukuk, to the tune of £200 million in 2014.
Islamic finance is at a very interesting stage of development in the UK. We've spent a couple of decades building our architecture for Islamic financial practice, making sure that Sharia-compliant financial services fit within our regulation and that we are appropriately legislated for it. So we now have Islamic banks, we have Islamic asset management companies, we have capital markets, we have $50 billion of sukuk that have been listed on the London Stock Exchange, and we have a range of financial services firms engaged in Islamic financial practice, and we extend beyond asset management and into the insurance sector as well.
Brexit has been dominating headlines since the referendum result in 2016. The journey has been long and turbulent, with still no end in sight for a final deal to quit the European Union. With such uncertainty, speculation is rife as to how this may affect the UK financial arena, in particular the impact on Islamic finance.
So Brexit impacts everybody in the UK, whether you're Islamic or otherwise. And so at one level, we're a bank that operates in Britain, and to the degree that there'll be economic shocks or potential economic shocks because of Brexit, particularly if there's no deal, will be impacted, because if that means people lose their jobs or the Bank of England puts up interest rates, it's going to impact the environment that we operate in. So it would be wrong to say Islamic banks in the UK are not going to be impacted. Having said that, we don't have a lot of European exposure.
Having a lack of exposure in Europe means that Islamic finance functions in the UK predominantly service a local retail requirement or a non-European client base. However, any Islamic financial institutions wanting to expand their business into the European Union space post-Brexit could be faced with some barriers.
Passporting most certainly could be an issue for those banks that wish to take their offering and expand their models and their footprint into Europe. We have a couple of our Islamic banks that are focused on retail requirement with their financing and their savings offerings, but others are servicing the requirements of predominantly an overseas client base, and they are servicing their UK requirements. So to an extent, I guess we could say that the offering has been UK-centric.
I think, though, I would say that the Islamic finance sector in the UK that's going to be affected by it, in terms of the actual Islamic banks that we have established and authorised here, they're still only a small number, and they're still quite limited in the amount of business that they're doing and even in their focus on the UK market. So I don't think any of them, as far as I'm aware, are at the stage where they're trying to move into Europe yet and take advantage of that passporting. So I wouldn't have thought it's going to have a big effect on them in the immediate future.
The inability to passport our services in the future to places like France, where there's 6 to 10 million Muslims, depending on which estimate you look at, that would be impacted. You'd have to go through a longer process to, get a license in France compared to now. may not be longer, but that part of the legislation and the deal in Brexit hasn't been resolved yet.
Although an industry leader in Europe and receptive to Islamic finance, the UK still has some way to go to having a wholly inclusive approach to this niche but growing sector.
There's something called the Bank of England discount window, which Islamic banks cannot take advantage of, and therefore when the Bank of England was trying to do quantitative easing, trying to pump money into the economy to help the economy, Islamic banks couldn't play a part in that. It just wasn't an Islamic way of doing that with the Bank of England. So we're working with them. So this is the key thing, they're receptive, but it takes time. I think the onus for doing things about it will depend on what else is going on. So we've got Brexit around the corner. There are government priorities. I can understand that. At the same time, it's up to us as Islamic financial institutions, our Ryan Bank in the UK, to push the agenda. We have to be more than just another small bank. We've got to be, championing the cause.
The uncertainty and a potential negative impact on the UK economy are playing heavy on the minds of not only financial institutions, but also startup businesses. One such startup, Yielders, a 4-year-old company, has had to endure the tough process of setting up in the UK like any other business, but being a halal business has had to get a Sharia license in place too.
Yielders is the first FCA-regulated Islamic fintech platform in the UK. Effectively, what we do is offer real estate investment opportunities to retail investors from as little as £100. Being an Islamic fintech startup in the UK has had both its challenges as well as its benefits. I think the UK government has done an enormous amount for the institutional level of Islamic finance in this country, and that is slowly starting to peter down into the retail element of it as well. In terms of regulation, we're both regulated by the Financial Conduct Authority in the UK and the Islamic Finance Council of the UK. From the FCA perspective, this was a 2-year journey, a lot of hurdles that we had to overcome. They effectively ran through our entire business with the finest of tooth combs, looking at all the different processes, legal documents, and how we market to our customers as well. This aligned quite well for our Sharia license because we'd already gone through a 2-year audit. So it sped up the process somewhat from the Islamic Finance Council of Britain and allowed us to ensure a dual regulation.
With the upcoming divorce from the EU on the horizon, putting a plan in place for the progression of the startup business was a necessary step to take to minimise any impending struggles post-Brexit.
Brexit is definitely a sticky situation for everybody. I think it's very much unknown and no one really knows what's about to happen. So in preparation for that, what we've done as a business is passport our license into 3 European jurisdictions, so Netherlands, Norway and Luxembourg. This has allowed us sort of forward thinking to think that if we are not able to transact with European countries based in the UK, what can we do outside of the UK to set up and continue our business? So we've got investment from all over the world, not only Europe, and we want to be able to continue to allow that going forward. The beauty of what we've done with the 3 countries that we've already gained regulation for is that we don't need a presence there. So we're able to manage all of our operations from the UK and have a little presence in a country whereby there'll be real estate managers or agents that we would be in contact with. But the essence of the business is technology, and the technology can be managed from anywhere in the world.
European markets beyond the UK have also demonstrated some will to grow Islamic finance. But what is the outlook for halal businesses within the Union?
For us, most of the innovation in the Islamic finance space has come from the UK. So we see Brexit, we try to see Brexit in a positive way. So what we believe is in mainland Europe, we never had enough competition to really demonstrate that there is a market. The fact that there is Brexit now, we think that there will be most probably entrepreneurs from the UK trying to get into the European market and setting up shop in Europe to go to that market. And that should foster a lot of positive energy within the industry. In mainland Europe, we are not worried about Brexit. we look at the UK as a potential market for us. And we know anyways, if we want to expand in this market, we will have to be locals. So we will set up shop here in the UK if we want to expand to the UK. So we're not very worried by that.
Despite the potential uncertainty and challenges ahead, many in the financial arena are looking for silver linings amidst the nebulous grey clouds of Brexit's pessimism.
It's really important that the UK focuses on foreign direct investment from Sharia-sensitive investors, because they have been a very visible inward investment into the UK. But with Brexit looming, it's very important that the British government reassures them that the UK economy will remain robust and be able to withstand the economic effects of Brexit.
As a means to diversify their business, so UK companies will have to create, and make their business plan work outside of their own geography. So to me, that will create positive energy. They will hire people, they will train people there, and there will be more innovation in the Islamic finance industry.
The UK, with around 40 years of experience in Islamic finance, has a lot to offer in this space. The foundations of Islamic finance have been put in place, and with continued support from the government, this system could see significant growth in Britain. The real opportunity for Islamic finance could arrive post-Brexit.
In my opinion, the small and medium enterprise sector is the lifeblood of the UK economy, and there's a £39 billion funding gap in the SME sector. That can be filled with Islamic finance. So the UK government, in my view, should be looking to plug that gap with foreign direct investment from the Middle East, from Malaysia, from other parts of the Islamic world, with Sharia-compliant investment into the SME sector. And that can be fintech enabled.
Being an Islamic fintech startup in the UK, there is the possibility, of course, that any Brexit legislations could impact our business negatively. We'd hope that the UK government are going to be looking at the SME market in particular to ensure that nothing changes, so we're able to continue to do business and grow, because the SME market is very important to the economy overall.
A feature of the UK market is real estate. It's an important investment feature because investors are attracted to the UK market, and particularly for the Middle Eastern market, which is with currencies that are pegged to the dollar, the value of sterling offers some interesting opportunities for investment right now. So there's a value consideration as well. But in terms of our market availability, we have a robust capital market infrastructure. Through the London market, we raise funding and investment for assets other than real estate. We're working with our insurance markets to create new Sharia-compliant solutions as well.
I think it's people have talked for many years about the huge opportunities there are for Islamic finance in the UK, and in reality that hasn't necessarily been borne out by the way that Islamic finance has grown and taken off, and there are a huge number of reasons for that, and I think there isn't a reason necessarily to be downcast and think, oh, this isn't working, it's never going to get there. But I think people have to accept that it's a very long-term thing, and that the permeation of the market will be slow, and there will be setbacks, and it's not just going to be a sudden taking off and big growth really quickly that I think people may have hoped a few years ago.
Although there are indications that an exit from the EU may affect the overall financial system, Islamic finance may escape a detrimental fate and could benefit from the outcome. However, inquiries by non-EU banks to set up Sharia-compliant services in the UK could be impacted by any laws introduced by the government post-Brexit. Next time on Islamic Finance Future Focus, we continue to look at some of the key factors affecting Islamic finance. Our focus will next fall on the changes being effected in Saudi Arabia as a result of Crown Prince Mohammed bin Salman's Vision 2030, launched and showcased by the kingdom to the world in 2016.
What they're doing now in Saudi Arabia is changing the rules for everything. If they hadn't done this, then the status quo of what's been going on, the lifestyle, the social values, the government organization, the corporate sector, they would have stayed the same forever.
We will examine how the proposed changes under Vision 2030 might affect and bring further progress to Islamic finance, not only in the Saudi domestic market, but in the wider region too.
Financial Services Program is one of the 12 executive programs which are part of 2030 Vision. So you can understand what kind of an importance financial services have. We are invariably talking of, or to a great extent in the sense, we are talking of Islamic or Sharia compliant financial services. As a population, about 30 million, people understand Sharia compliant investment, people understand Sharia compliant finances.
Saudi, in terms of Islamic finance, it's not really hitting its weight. So Saudi, for a country that's the home to Mecca, Medina, that has a domestic population, it's a G20 economy, should really, I think, have a bigger role within Islamic finance.
How much of the international investor community will accept Sharia as a form of finance? And I have to answer that by saying all of them.